Big money moves silently on-chain, but their footprints are visible. Today we'll uncover what the top ZBCN players are holding, why they hold it, and what their moves mean for retail investors. The financial strategy of top players in ZBCN. What crypto they're holding. Stay till the end for 3 actionable takeaways. What is ZBCN? ZBCN is the native governance and utility token of the Zebec Network, a payments and payroll protocol building real-time crypto rails across multiple chains. The token is visible on Solana explorers and listed across major market aggregators. Who are the top players? When we say top players, we mean 4 types of on-chain actors: project treasury and team, tokens allocated for development, partnerships, and operations; early backers and VCs, strategic investors who received allocations at earlier rounds; exchange CEX wallets, custodial addresses that represent many retail and institutional users; on-chain whales/large holders, private wallets accumulating or trading large blocks of ZBCN. You can find wallet-level snapshots and holder counts on chain explorers and holder tracking sites. These show concentration and flow patterns, even if identities remain anonymous. What these players actually hold. Now let's break down what each player typically holds, both ZBCN and other cryptos, and why. Project treasury and team treasuries usually hold a mix of ZBCN for governance and ecosystem incentives, stablecoins for runway, and often a blue-chip crypto reserve like SOL or ETH to pay partners or secure liquidity. Treasuries rarely hold only one asset. They balance volatility with stable liquidity. Why? Runway and budget stability, fund buybacks, grants, or payroll in stable assets. Early backers and VCs. Early investors frequently hold ZBCN long-term, but diversify into BTC/ETH and stablecoins after initial token unlocks. Their strategy often involves staged selling into liquidity events or providing liquidity on DEXs to earn fees. Visual, schematic timeline of vesting plus staged sales. Note, identities and exact holdings can be private. On-chain analysis shows large wallet balances, but not off-chain allocation plans. Use caution when labeling addresses as VC without proof. Cite holder analytics and caution about on-chain anonymity. Exchange custodial wallets. CX wallets often show up as large single addresses with high inflows, outflows. Their holdings can represent aggregated retail exposure. When exchange balances rise, it sometimes means selling pressure may be ahead. When they decline, it can indicate accumulation or transfers to cold storage. On-chain whales. Large holders. Whales are big, but not always simple. On-chain tracking shows that many large ZBCN holders keep significant amounts of ZBCN and top DeFi staples. ICOL for chain fees and staking, USDC/USDT for liquidity and selling flexibility, and sometimes BTC/ETH via wrapped positions or on other chains. Recent evidence? Some analytics reports and market commentary have flagged whale accumulation swings and volume spikes in 2025, a signal that large holders are active. But remember, headlines may overinterpret isolated on-chain transfers. Tactics top players use and why. Knowing what they hold is half the story. The other half is how they use those assets. Here are common strategies. 1. Staking, locking. If a token supports staking or on-chain incentives, teams and whales will lock tokens to earn yield and reduce circulating supply temporarily. Lockups also signal long-term commitment and can boost prices if supply tightens. 2. Liquidity provision and market making. Large holders provide liquidity on DEXs or on CEX order books to capture fees while enabling smoother price action. Market makers will hold both ZBCN and stablecoins to facilitate trades. 3. Treasury management. The project treasury actively reallocates between ZBCN, stablecoins, and blue-chip assets to pay partners, run marketing campaigns, or execute buyback programs designed to support price stability. 4. Cross-chain hedging and wrapped positions. Because Zebec is multi-chain in focus, top players often hold wrapped coins, e.g., wrapped BTC or ETH, and stablecoins across chains to arbitrage, settle payroll, and hedge. How to interpret on-chain signals. Now the practical part, what do these signals mean for you? Rising exchange balances, potential short-term sell pressure. If deposits to exchanges spike, some holders are preparing to sell. Large transfers to cold wallets, accumulation, long-term holding. When big addresses move tokens off exchanges into custody, that can be bullish. Concentration risk. High concentration equals volatility. If a few wallets hold a large percent of circulating supply, sudden moves can cause big swings. Context is king. Pair on-chain moves with news and treasury disclosures. A spike could be an airdrop, vesting unlock, or routine treasury rebalancing. Not necessarily smart money signal. Example case. Recent whale accumulation headlines. Recently, market write-ups have claimed whales were accumulating. ZBCN and analytics platforms flagged big wallet activity. These stories are useful to monitor, but cross-check the raw on-chain flows yourself before assuming a whale buy narrative. What you can do next. Takeaway 1. Use on-chain tools to confirm flows. Look at explorers and holder trackers to see whether tokens are moving to exchanges or cold wallets. Takeaway 2. Watch composition, not headlines. Top players often hold ZBCN plus stablecoins, SOL, and major tokens. This hedged approach protects operations and liquidity. Takeaway 3. Don't trade based on single transfers. Always combine on-chain signals with tokenomics, treasury announcements, and exchange data before making a decision. If you found this breakdown useful, like, subscribe, and hit the bell. Drop a comment. Which whale move should we analyze next? I'll add live on-chain examples in the next video.